Your win rate does not matter when it comes to you becoming a profitable trader. There are so many traders that I know that are like, oh, I have a 70%, 80% win rate, and they don't make any money. They're broke as fuck, and they suck when it comes to making money on the charts. I'm here to tell you what's actually important, which is your risk to reward. And I'm going to get into it. No nonsense, no bullshit. We're just going to dive in. If you guys don't know me, I'm Sumi from Basani. Let's get to it. So first and foremost, when it comes to making money on the charts, it's not about your win rate. I'm going to keep saying it over and over in this episode because I need to drill this in your head. It's not about how much you're winning. It's not about you making more successful trades and losing trades. It has nothing to do with it. It has everything to do with your risk to reward. I think a lot of traders go in with the mindset where they just want to make 20 to 30% to 40% per trade. Quick hits, and that's good for them. But the problem is when you lose, you're holding the bag. I know too many traders that as soon as they start getting in a profit zone, they cut out, they start trimming 25%, 40%, 50%, and they're not actually trying to extract as much profit out of the trade. And that also comes from the trade itself. You're not taking good trades where you're able to really get your first trim at 100%, at 150%. You're not able to take a trade that really is going to stretch past 200, 300%. Mind you, those are hard to get. It's hard to get a projected movement over a stock over 200%, 300% unless you're doing swings. When it comes to scalping, you're really not going to get that. So there's two different philosophies that I'm going to break down there, but most traders don't actually have a mindset of taking their first trim at 100% for a swing. They take out at 50%, but that really opens them up to a lot of risk because when it comes to them taking a swing, they're holding it for 50, 60, 70, 80% of loss. And it becomes the math is not math, okay? If you are going to take scalps, you need to have a very hard stop loss at 10%, 20%, and you need to be able to cut out very quickly because when it comes to scalping, you're typically not going to get those 100, 200% gainers every single day. It's just not a thing. You're going to get 50 to 80% in terms of wins, which is what I really do. A lot of my scalps, I'm getting 35%, 70%, 50%. So when the trade goes down 10 to 20%, I'm out because I need to be able to manage my risk. But when it comes to swings, I'm able to hold a lot longer, 70, 80% down, maybe even 100% down on the position, let them completely go because my wins are 200, 500, 800%. So it's all about risk to reward. And I can operate on a 35%, 40% win ratio if I'm willing to do this the right way. When you're trading scalps and you are taking profit at 80%, 100%, and you are taking out on trades, you're cutting out at 10%, 20%, you can theoretically win 4 to 1. You can take 4 losses to 1 win. You see what I'm saying? When you're taking swings and you're getting 400%, 300%, but you're actually losing the whole full position, you can operate 3 to 1, 4 to 1, whatever it is. You need to be able to understand your formula. And for me, when it comes to swings, I'm able to risk the entire position. I'm willing to let the whole thing die because I'm willing to take 200 to 300% on a profit, and I'm taking trims at 100% first instead of just waiting for it to kind of just level out. When it comes to scalps, a lot of my scalps are also like 80%, 70%, 100% winners, but I'm cutting out a lot quicker. 30%, 40%, 50%, I'm out. So risk to reward is everything. Do not fall into the trap where you're actually winning more trades because you'll find out your portfolio is actually suffering more. My biggest months of trading, I actually had a lower than 50% win rate. And a lot of amateur traders, a lot of amateurs when it comes to the trading space don't understand this. My mom would look at it and be like, you're losing more than you're winning, you should be losing money. But the reality is they're not looking at the percentage gains. When you're constantly taking trades, you are exposing yourself to more risk. You need to be able to hold off and look at positions that are actually going to move. Before I take a trade, I look at what am I risking and what am I actually going to be rewarded with. And if I predict the stock is going to move 4 to 5 points, and that 4 to 5 points is going to net me 100 to 300% gain, then it makes a lot of sense. But there are certain positions where I'm taking a trade and I might move 10 points and I might only make 50%. In fact, I recently had a trade with Micron Tech that moved up 30 points, okay? The whole thing moved up 30 points. I only made about 110% on that trade. So I had to look at it and say, do I think this is going to move 30 to 50 points? Yes. And some of you might say, okay, even if it moved 5 to 10 points, I'm going to jump in. It wouldn't be worth it for me because the way that option was moving, it would not be profitable for me if it did not move 30 to 50 points. So you have to be very careful with what you do and you have to be very calculated in the way that you take a trade. The risk to reward is more important than everything else when it comes to trading. So if you're risking the right amount of money for your reward, you're always going to become profitable. General formula: 10 to 20% cutout rate when it comes to scalps. Don't have a high tolerance of risk when it comes to scalps because the market is not typically going to reverse the way that you think on many days. If you're trading a day where there's a lot of volatility, yes, you can risk a lot more. You can go 30 to 40% because the volatility is very high. And obviously you have to look at that. Right now we're in wartime, volatility is higher. But when it comes to swings, you can afford to risk more because a position can kind of consolidate or go the other way and have a good price hike at a certain catalyst event. If there's earnings, if there's certain demand at a certain time of the month, you can can risk more on swings as long as you time them out right. The more time you have in your contract, the more you're willing to withstand the lack of movement in the direction that you want. So with that being said, I hope this video was helpful. Once again, Sumi from Team Basani. Hope this video helped you with your trading journey. Like, comment, subscribe. Until next time, peace.